Okay, everybody, it is me, Gregory Mannarino. What a freak show day. Lovely, but still a freak show. It's always a freak show, but that's what makes it exciting, wouldn't you say? All right, people, let's talk. How many of you out here are at all surprised that the stock market fell today after a very volatile day? I mean, we had the major indices negative and positive and negative and positive. We finished negative after a couple of words out of the mouth of Fed President Bullard. We'll talk about that. But how many of you, with the show of hands, are at all surprised to see the stock market fall today? Get your hand down. Yesterday, the title of the video, my post-market wrap-up, I said something is about to happen and be ready for it. I explained to you in that video and in prior videos over the last few weeks that this market has gone stupid. It's gone straight up after the recent bottom, the normal correction that we had in January, and no asset class, nor the market itself will go straight up without some type of a correction or a pullback. And that's what we may, all right, in quotes, may be seeing right now. We can only hope. Again, look, you know how markets work. If you follow this blog, it's a random walk with an upward drift. You need the market to give back, establish a new floor so it can go higher. And oh, I promise you, there is no doubt in my mind that this market is going higher. Expect new record highs in relatively short order, especially right now. If you subscribe to my newsletter, again, link in the description of this lovely video, you get a lot of information from me that you don't get here. Stuff that just I want to cover during the day. So if you do not subscribe to my free newsletter, what are you waiting for? Do it right now. Click on that link. I've explained again that a few things need to happen. I've been covering lately how energy needs to fall. Well, energy fell a little bit. It got bought right back up on the back of apparently there's a little bit of escalation of activities over there in Russia, Ukraine. Look, I'm not there and you're not either, probably. We really have no idea what's going on over there. All we have to do, unfortunately, is rely on the propaganda ministry to tell us what's going on. In my view, this still remains an arms deal in disguise. I sincerely believe that nations around the world, including Russia and the United States, are going to be building up their military arsenals. And the real reason for that, they want to create fear, and they need another reason to borrow epic sums from the future. But you see, you're not allowed to know that. You have to be strung along, turned into a puppet, because they can't tell you the truth. Imagine for a second if President Retard, or the last President Retard, or the President Retard before him were to say, guys, I have to let you in on a big secret. We need to borrow a lot more money, so we're going to make up something just so we can do that. We're going to make you very, very afraid of it. And then you're going to just say, okay, take all the money you need, because that's what they do to you. Over and over and freaking over again. That's the truth. So anyway, look, I am not saying that this is the beginning of what we need, which is a pullback in this market. It may be. We will find out soon enough. The fact that the market did fall today under some pressure really got started when Fed President Bullard came out with his take on how the Federal Reserve, they really got to fight inflation. So we're going to be raising rates aggressively. Down goes the stock market. But if you realize, if you've been seeing what's going on, they're playing the same game they always do. They send out these Fed presidents to say one thing, and we've been having a lot of backtracking. And then they send out another group of freaks to tell you the polar opposite. Again, the job of the Federal Reserve is to keep people in the market confused, off balance. But you and I, we laugh at this shit. It's crap, because we realize the goal, the end game, to inflate, and inflate some more. So when you see this freak, or the today Bullard bullshit, whatever his name is. And yesterday, I think it was, we had the ghoul of the Federal Reserve herself, Loretta Mester. The thing's a freaking ghoul. Both with totally different stories. Realize what you're seeing. It's the same charade that they play over and over again. Laugh your ass off. All right. Anyway, so let us move forward here. Let's focus a little bit here on the 10-year yield, which hit 2% today, actually a little higher than that. I've explained to all of you lately that I believe we would see the 10-year yield close above 2%. I'm not sure how much higher, 2.25. It really depends on things. But again, this is no red flag. It's a yellow flag, but we're not seeing any big spikes here. So it doesn't got me worked up at all, okay? And in my view, the market's going to just do what it always does, understanding that the easy money is not going to stop. It's not going to stop. I don't know why people keep writing to me and telling me I'm wrong, but it drives me out of my mind. Then I say, really? Oh, did the Fed taper? How about no? You want me to prove it to you? Yeah. Go to the Federal Reserve's website. Just look at their balance sheet for the last year. They tapered in November, supposedly. There's been no taper, no drop. The slope has remained the same. You're being duped if you believe this. You're being duped if you believe the Fed is going to be overly aggressive with rate hikes. No, the Fed will support the market. The Fed is destroying the economy and the middle class by design to support the market, to support the rich and the well-off. That's all it is. Once you realize that, you're going to be a lot better off. Now, crude oil, again, getting bid higher on the back of whatever's may or may not be going on over there with Russia and the Ukraine. If people, listen to Greg Mannarino for a moment here before I have a meltdown. If there were some kind of invasion, incursion, armed conflict, it would hit the market. It would hit the market and hard. But depending on a whole lot of factors, the market's going to rebound. It's going to rebound fast, as a matter of fact. So just be ready for that. I don't think that's going to happen. I really do believe this is just an arms deal in disguise, and you're going to see a lot of nations around the world building up their arsenals again to borrow cash into existence through any mechanism possible. And that's just what they're going to do. I think you know that. Cryptocurrencies today holding their own. Bitcoin's still around 44. We're at 45 earlier in the day. Gold and silver did fall under some pressure today. Not much. Relative strength of the dollar was higher. It did finish higher, talking about the Dixie, but nothing dramatic here whatsoever. And the 10-year yield, again, above 2%. Imagine my shock. No, we all knew it was going to be there. I think it's going to stay above there for a while. Is it possible we could dip down? Sure. But I think it's going to end up settling higher as the market is pricing in. Think about what I'm saying. Sit back a moment. Let me know if this makes sense to you. Okay. So we've had this adjustment period for the stock market for a while. We've watched the 10-year yield rise. Got a little people rattled, put some pressure on the stock market. Okay, big deal. I told you this was just a normal correction, and it was. Okay. Well, all the other freaking imbeciles, oh, this is it. The big one is going down. Duh. Wrong again. No. And then that spike in the 10-year yield, which got my attention to like 1.92, like overnight. And now we're closing above 2%. Okay. We're going to keep our eye on it. But we're not going to do a damn thing. We're not going to change what our strategy is. So if we realize that the Fed is going to raise rates, I've told you this, it's going to happen. Okay, I know a lot of you think I'm wrong. I am not wrong. Okay, they're going to do it soon. It's going to happen. And the market is going to get off on the rate hike. That's how it's going to go. So right now, we have the market pricing it in. It's going to happen. What do you think is going to happen? You really feel like the market's going to crater after that? It would take, sincerely, a pretty big outlying event for the market to really fall off of a cliff. And again, where is that big event going to occur? In the debt market, not the dog shit stock market. You understand? Stop looking at it, really. Look at the 10-year yield. Look at the MMRI. You know, I want to talk about the MMRI in a moment real quick. But that's the story, people. It should be easy to understand the dynamics behind this, the drivers behind this. Now, A couple of other things that we should be looking for. We need a pullback in the market. Okay, are we at the beginning of it right now? Are we going to see a deeper sell-off? Personally, I would love to see that. And my Lions would as well, because it would give us opportunities to buy more cheaply. The banks. Let's talk about the banks here. I am still waiting for a pullback, a correction in the banks. JP Morgan, Goldman Sachs, Bank of America, more specifically. If you're a sub to my newsletter, you know about this. We're waiting. We're sitting and we're waiting to strike. When we get a pullback, and I hate to say it again, I think we're overdue. I think we're freaking overdue. Get a pullback here in the banks. All things being equal, we buy, or we just hold the current position. Very, very simple. Look, I'm the easiest guy to understand on the face of the earth because they don't deviate. I've been sticking to this exact strategy for a very long time, and I'm not going to change it until a yellow flag turns red. Now, let's talk about the MMRI real quick. There's a gentleman out here named Jack. My goodness. He... Nobody's Special Finance, that's his channel, did some really nice work with regard to the MMRI. He created MMRI, the Modified Mannarino Market Risk Indicator. Now, I said to everyone, this guy did some really good work with MMRI, and it is good work. I'm not going to impugn what he did at all. I just don't feel that the MMRI needs to be changed, so that's why I've left it alone on my website, traderschoice.net. You see, look, I've told you this a million times. It's not a crash indicator. You're looking for a crash indicator? I don't even think the MMRI is a good crash indicator. By utilizing his equation with debt to GDP, I don't believe it improves anything to a great measure. To me, the MMRI in its current form works, and if it's working, leave it alone, in my view. So that's the indicator I will be following. You are more than free to follow Jack's work. His work is good. It's very good, but I never said his work was better than the MMRI in its current form. And personally, I don't think that's the case. But you can have your own opinion. Look, I don't know everything. I'm certain there's a lot of people out here, and Jack included, are probably smarter than me. But I don't see it. I don't see a reason to change it. So the MMRI in its current form will remain the way it is on my website, traderschoice.net. I strongly suggest that you follow it. It will give you a big clue as to risk in the market. It's that simple. All right. Anyway, what else did I want to talk to you about? Told you about the banks. We gotta work on that. Energy, I told you about that. The 10-year yield. Pretty much that's where we're at here. And this Bullard, this from the Federal Reserve, I was laughing. I'm laughing. I'm going, look what they're doing. The same day. Many of you have been in this market for a long time. Been with me a long time. And how many times, without exception, do we see the same charade played out over and over and over again? They send out these freaks to say this and these freaks to say that. It never changes. We know their playbook. We know exactly what they're going to do. It's all scripted. All of it. So just understand what you're looking at. See, that's the problem. When people look at the market, for the most part, they're not really in the market. Look, I have said I am the market. All right. I am the market. I understand this thing very, very, very well. And so, look, I understand people who don't study this thing around the clock, like someone who's a little bit not normal. They may not know what to look at or what they are looking at or understand what's going on because they're being distracted. They're being told to look here, not over here. It's all the same, people. This is a game, all of it. The economy, the markets, the propaganda ministry, politicians, everything. It's a game. Once you understand that, I think things will be more clear to you. Nothing is what it seems to be. How many times have you heard me say that throughout the years? All right, look, pretty much that's it. I covered what I wanted to cover here. With regard to today, is this the beginning of the pullback that we need to see? I mean, really, look at the title of my post-market wrap-up yesterday. I said something's going to happen. Be ready for it. I hope you are. Look, you got to expect these things, and you have to understand why they happen. Markets don't just go straight up without a little correction ever, or a little pullback ever. That's normal. And in this environment, with the market pricing in rate hikes, it's extremely bullish. And if you don't see that, I don't know what to tell you. Like I said, it is going to take a major, and I mean major, outlying event to cause the debt market to implode, which will cause the stock market to implode. Without that happening, expect the market to continue higher because the easy money is not gonna stop. Simple enough. This guy here, honestly, loves all of you a lot. And I will see all of you tomorrow morning. Looking forward to it, as always. And I'm out of here.